Hey guys, welcome. So in this particular video I'll be teaching you the most amazing strategy out there. This is the strategy that's made me all the money in the forex market. This is the same strategy I'm currently using, and I've used the same strategy to pass every single prop firm evaluation out there. I'm a trend follower. I love the trend. The trend is my best friend. The trend has made me all the money. I see a lot of guys out there try to complicate a lot of things for themselves. They take reversals, they trade breakouts, they trade everything. They trade in ranging market, they trade every single thing. Trust me, you are wasting your time. The easiest and the simplest form of trading is simply following the trend. Okay, it is actually the oldest form of making money in this market, and trust me, it hasn't changed. It hasn't remained the same. Making money in the forex market is that easy. It is really that easy. So the strategy I'll be teaching is a very easy strategy. Stop complicating things for yourself. Learn the strategy I'll be teaching you and make money from yourself. Stop struggling. Stop jumping from one person to another person. Learn. Okay, so right before we jump into this video, I'd love you to subscribe. If this is your first time on my channel, I'd love you to subscribe to this channel. I'd love you to give this video a thumbs up and click the notification icon so that every single time I do a video like this, you're actually the very first to see it. Every single week I come on this channel to do a weekly forecast. I do analysis of the market and the pairs I'm actually looking to trade off. A lot of my students, a lot of my subscribers have made good money using my weekly market analysis, and I'm very much hopeful that you make good money for yourself too using my analysis on this channel. Okay, so click on that notification icon, make sure you're subscribed to this channel. Okay, so that said, let me teach you the most amazing strategy you can find anywhere in this forex market, okay, in this industry. So cheers, let's jump right into the chart. So guys, welcome to my screen. So following the trend is one of the most powerful strategies that you would actually learn out there. It's not like it's one of the most powerful strategy. It is actually the most powerful strategy that you have. It's the oldest, okay? It's the oldest strategy, and it's actually really the best strategy. It's always best to align yourself with the trend. I did a particular video on this channel. The name of that video is Forex Holy Grail. The title of the video is I think it's the oldest secret in forex trading. So I think you should actually watch that video. So in that video I give more details as to why you should always follow the trend. You can actually go and watch that video, then before you come back to this video, or however I can finish this video and actually go and watch that video. It will really teach you a whole lot. It's one of the earliest video I did on this channel. It will teach you a whole lot about why you should always follow the trend. Okay, so there are actually three strategies I use to follow the trend. There are actually three ways that I use to follow the trend. So I'll go ahead and teach you those three ways, you know, right now. Okay, so let's start with the very first. Okay, now I have a support and resistance strategy. Support and resistance strategy of following the trend. I'll show you that shortly. Then I also have a moving average strategy for following trend. I'll show you that shortly. Okay, and I also have a Fibonacci strategy. Fibonacci strategy is it's actually one of my best strategy for following trend. So I'll show you how this thing works, you know, very shortly. I'll be going to my charts like shortly. Okay, but however, before we do that, let me just explain what I mean by following trend. So I'm sure that you guys, you know, you are in sync and you understand what I mean when I say that we actually looking forward to following the trend. Let me put my phone on silent. So good. So now let's assume that we have a chart right here, and the market doesn't move in, you know, straight line. You can't see a chart just going like this all the way up. Okay, it always moves in, you know, in highs and lows, highs and lows, highs and lows. But ultimately you can just see that this is clearly an uptrend. Okay, or it moves like this. You can clearly see that this is a downtrend. Okay, so the whole idea of following a trend is to put yourself in a position where the market is actually moving you in the trend, in the direction wherever it is actually going. Because in the forex market, you just need to follow the big boys. You need to follow the big banks, the big institutions, the hedge fund guys, and all, just because those are the guys that have the kind of money that is actually moving this market. So you don't want to be caught on the wrong side. Okay, what you need to all you need to do is to position yourself in the trend. Okay, so the whole idea of those strategies is to catch this kind of swings. If it's an uptrend, for you to be able to position yourself in key areas like this, that helps you to catch like very major swings in the market. Okay, so I will show you how to use these three strategies to capture these swings. Okay, let's assume if the market is going on a downtrend, something like this. Okay, I'll teach you how to use the strategies to position yourself in key areas like this to catch like the very major swings in the market for you to actually follow the trend. Okay, so that said, let's start with the very first strategy here, which is the support and resistance strategy. So let's go step right into the chart. Now this is a GBP USD chart. I didn't premeditate any of these things. I will be spotting this this kind of opportunities with you. I'll just be showing you examples where it actually happened and how that works. Okay, now it is quite simple. Now this place is actually a good place to do this. Let me show you. Let me put my replay options, so I'll show you an example of where this actually happened, like really good. So this is actually a 1 hour chart. Now if you look backwards on this particular chart, you will see that this area right here was a very good support, and which actually became was actually a resistance here and somewhere here. Okay, so if we decide to draw a zone somewhere here, let me draw a zone here. If we begin to draw this support zone, which became a resistance zone here. So one of the ways, okay, this is, as you can see here, there are three major touches here. It touched here, touched here, touched here. Okay, so and from what you can clearly see, most times when you see like long candles like this, like consistent, let's say consistent red candles or blue candles, when you see like consistent maybe 5, 7, 6, 7, 8, 9, 10 red candles on a row, just know that sooner or later you will see very long blue candles just the same way, going up. Or if you see consistent blue candles, consistent 5, 6, 7, 8 blue on a row, there is no interjection with any red candle, just know that sooner or later you probably just see red candles too, like that. Because most times when market just gives you that kind of sharp move up, it's always, most times it's followed by a sharp move downwards. Okay, for example, if you see this red candle, see this very sharp move into the support zone. There was also a sharp move out of the support zone with this blue candles right here. But however, that's not part of the lecture. But the whole idea of this whole thing is to, from what we can see here, we can establish that this was a high, this was a lower low. Okay, because this was like the the last low before this one. Okay, and this was like another high, lower high, and then we have this that is a lower low. So what are you expecting? We're expecting that this market probably gives us a move into this resistance zone. Now the reason why I'm specific with support this zone is because this zone was a major support here and it was a resistance here, it was a resistance here. So most times if I want to follow the trend using the support and resistance strategy, I usually love to only, emphasis on only, follow the trend from points in the chart where the market has actually tested a support and tested a resistance zone. Okay, in this case it was a support here and it was a resistance. If it was only a support and looking backwards it was never a resistance before, I'll probably be really skeptical. I love the zone that I want to continue the trend to have been tested as a support and tested as a resistance, or tested as a resistance and tested as a support. So I want both the zone to actually be have been tested as a support and resistance, okay, before I will be able to set out my put my expectation to actually continue the trend from that area. So in this case, as you can see, if we progress on this, we can see the market slowly pulls in into this resistance zone, I would also love to see that it actually tested it, like really touched it, okay, because most times when it gets close to the zone, there's already resistance, there's already some form of selling pressure, especially if it's a resistance, there's a lot of selling pressure from that area. So because most traders love to take their take profit before the actual resistance, so they don't get caught up in maybe when the market doesn't actually, it misses their take profit by maybe, let's say, 2, 3, 4, 5 pips. So that's the way I trade too. Before I put my take profit, my take profit most times just a little below, as if I'm on a buy, a little below the most recent resistance, okay, because I don't want it to get near to my take profit, like 2 pips, 3 pips, and then it doesn't hit it, then it starts going down again, okay. So I take my profit before the main support actually happens. So that's why most times when you see market approaching major support or major resistance levels, you tend to see the wicks just start, yes, because there's a lot of pressure there, okay. This is where people are taking their profit, they are selling, because they don't want to get caught up in any mishaps where the market doesn't actually touch their take profit, okay. So that's why you see this kind of wicks approaching support or key resistance levels, okay. So in this case, good, as you can see, it has clearly touched here, and we can see this bullish bearish engulfing pattern, candle pattern form here. So this is a good place to actually continue with the trend, okay. So in this case, you can actually decide to put your stop loss above here, somewhere above here, then follow the trend all the way down, because this is like the next major support that you're looking forward to take profit. Somewhere here, this is the support that you're looking to take profit. There are 2 of them here, this one and this one. So you can decide to put your TP1, okay. Take note of where I'm putting my take profit. Like I told you guys, I don't like waiting. I would have decided to put it somewhere around the week, but like I told you guys, I don't want to be caught up. I don't want to have a near near, what's it called again, near success syndrome kind of. So I don't want to get near to my take profit and then the market doesn't touch. So I put my take profit at that where the support actually starts, okay. So this is where you can actually put your take profit. This is your TP1, and you can move this to TP2. So this is the typical 1:2.9 1:2.9 risk to reward, and it actually plays out like really well, as you can see here. So that's a strategy that you can use to actually set your take profit, okay. Follow the trend, using the support and resistance strategy. So that's just one out of the strategy, okay. So let's quickly review the second strategy. Now let's quickly review the second strategy. Now the second strategy is the moving average strategy, okay. Moving average strategy is another strategy I love using to follow the trend, okay. It's quite simple. Now let me show you how that actually works. I'll explain this particular one I'll kind of float it, because I don't want to actually give out all the juice that some of my students are enjoying in the Forex Bootcamp, okay, because this is a strategy that we use quite a lot in the Forex Bootcamp, and I would really not love to spill out the whole thing, because people actually paid to access this information, and I'm giving out part of it here for free. So I wouldn't want to just give everything to you guys, okay. So but here is something worthy of note. So I'll find, okay, good. So this is actually a very good place to do a replay. So let's start here. Good. Let's start here. So as you can see, this is clearly an uptrend. Of course, you should know how to spot uptrend. Simply higher highs and higher lows, okay. So this was the last low, this was a higher low, and we have another higher low, okay. So this was a high, a higher high, another higher high. Okay, so this is clearly an uptrend from what we are seeing. Okay, so once you have spotted an uptrend, this is what we have so far. So this is clearly an uptrend. Okay, so once you've spotted an uptrend and you want to use the moving average strategy to actually continue with the trend, what are you looking for? Now there are three different, in fact there are more than three moving averages that you can use to do this. You can use the 20 moving average, you can use the 50 moving average, you can use the 10 moving average, you can use the 200 moving average. I will not be going into details into the actual one that we use, but for the sake of this video, I'll be showing you this with the 50 and the 20. Okay, now the 50 and the 20 moving average are very common moving averages that a lot of traders out there actually use to time their entries. Okay, and most times when you see a trend happening in the market, it is always bouncing off a particular moving average. Either it is bouncing off the 20 moving average, or it's bouncing off the 10 moving average, or it's bouncing off the 50 moving average, or it's bouncing off the 200 moving average. So there are some that are actually much more popular. Okay, so this is where the work is. It is left for you to actually experiment with the moving average, put the 20, put the 10, put the 50, put the 200 to see the actual one that the market is actually bouncing off. Because at some point, for some trends, it might be bouncing off the 50. For some trends, it might be bouncing off the 30. For some trends, it might be bouncing off the 200. For some trends, it might be bouncing off the 10. For some trends, I see moving average that bounces off the 8. 8 moving average, 8 period moving average is really a very good moving average. Okay, but like I said, I will not be telling you the exact ones that we use at the TradeWave Bootcamp, but of course, go and do the work for yourself. Okay, but however, this is something that will help you. Okay, so in this case, we can clearly see that this particular trend is we can say is actually bouncing off the 20 move, because this smaller one is actually the 20 period moving average. So from what we can see here, if we isolate the 50, this is an experiment. Okay, so you can just put different moving average, so you find the one that actually the trend is currently bouncing off. Okay, so this is what we are seeing here. So we can see clearly here that this market from here, if we start from here, it touched here, broke this, because support and resistance levels are dynamic. Moving averages can be dynamic support and resistance levels. Okay, I hope you should already know this. If you don't know this, I mean, you should come to the TradeWave Bootcamp. Okay, so it bounced off here too, then came over here, bounced up, and then at this point we can see that this, the moving average here is still like it's a good both support and resistance at this point here. Then it came over here again, it bounced. Okay, so we can see that, we can say clearly that this particular trend is actually consistent with bouncing off the 20 moving average. So what do you do? It's really simple. All you need to do is to actually wait for the next bounce. Okay, wait for the next bounce, and let me show you what I'm talking about. So as you can see, it has bounced off the 20 moving average. So because this is an uptrend, of course you definitely want to be following the trend. You wait for the market to actually come back to that moving average again. Okay, come back to the moving average and give you a clear entry. Now there are specific candlestick patterns that we love to see, and I teach at the TradeWave Bootcamp for my students who would love to actually trade using this kind of strategy for trend continuation. Okay, so but however, this actually looks like a good entry. This is not exactly our pattern of entry. We don't use morning and evening stuff for trading because we really think they're really weak entry patterns in the market. But however, this is actually looking good from what I'm saying. It didn't actually touch the 20 moving average, but at this point I can be able to actually risk to enter this trade in for a buy. But however, if you really want to be do your entries clean, you don't want to take risks, you want to enter too early or too late, you might actually just want to wait for the market to come and actually bounce, touch the moving average before moving. Okay, so from what I'm seeing here, we actually missed the entry. This entry would have been really cool for an entry, but we missed it because we are waiting for a very good entry. But this long week right here, I teach at the TradeWave Bootcamp also that the most powerful indicators on a candlestick is the wick, is not the body. A lot of people don't know this. A lot of beginner traders, once they see the length of the body of a candle, they don't even take into cognition of the wick. The wick is the most important part of any candlestick. well, this is not for it's not for free. This aspect of knowledge is not for free, but however, this is actually a good entry. So we're going for a 1:1 risk to reward on this trade because of the week. Okay, I'm entering this trade not because of this red candle, but because of the week of this candle. And let's see whether it actually plays out that way. So boom. So as you can see, we actually hit a 1:1 on this trade. We would have actually done a 1:1.2 if we wanted to do so. This is a sample of how to actually use the moving average for a trend continuation. Okay, first of all, check the high highs and the high lows. Be sure that this is actually a trend happening. Then look for the moving average that the trend is currently bouncing off. It can bounce off any of the moving averages, okay, but there are some of the moving averages that it bounces off like really much more often than other ones, okay, which is what I teach in the Trade Wave bootcamp. Okay, but however, experiment. Look through the 200, the 30, the 8 moving average, the 20, the 50, the 10 moving average. It can be bouncing off any one of them. Okay, so that's it for the moving average chart. Now let's go to the Fibonacci strategy of trend following. Now the Fibonacci trend following strategy is really simple. Okay, really simple. Now I'll quickly show you the particular Fibonacci levels that I love trading off. I don't like the fact I'm actually going to be telling you my levels, my best levels for trading for free, but well, man, you guys have been nice to me on this channel, so I will just show you. So let's use a downtrend for this particular example. So let's find where a downtrend is happening, and then I'll pull out a Fibonacci to show you how I use it for my trading. Okay, so good. So this is actually looking good. This is actually looking good. So let me do a replay from here. Now, from what we can see here, first of all, of course, you need to have the good knowledge about support. And if you don't know how to do support and like spot support and resistance, like even without drawing lines on the chart, you just need to do more practice. Okay, but this is easy to see. I mean, the blind can see that this is a high and this is a lower low, because this was the last low, this was the last high. So this is a lower low, and we have a lower high because this was the last high. Okay, so from what we're seeing here, this is clearly a downtrend. Okay, this is clearly a downtrend on a 1 hour chart. It can be doing something else on the 4 hour chart, but for the sake of the strategy, we do not care what other time frames are actually doing. So this is actually a case of a downtrend. Okay, so what are we looking for? We want to see what happens and how this market will actually pull back for us to actually find an entry using the Fibonacci. Okay, so going forward, this is what is happening on this. So you pull out, I tell my student, you pull out a Fibonacci from the most obvious level that you see a possible reversal happening. So from what we are seeing now, this is purely a reversal about a pullback, so a retracement actually happening, not a reversal, a pullback. Okay, a retracement. So you pull out a Fibonacci when you see this full blue candle actually formed here. So pulling out from my Fibonacci, you draw from this last high, pull it all the way down, Now from your knowledge of Fibonacci, you should know, let me adjust it. Good, this looks good. So you should know these are actually my best levels. Okay, my 100%, 61.8, 50% retracement, 38.2 retracement, 23.6 retracement, and 0, that's like the beginning. Okay, doesn't matter. So now these my very best levels, and I would advise you, okay, in your trading, do not enter a trade because it retraced to the 23.6 or the 38.2. These are, like, in my own experience of trading, okay, I'm not imposing my thoughts on you, I'm not imposing my trading strategy on you, but what I'm teaching is a product of 6 years of practice in this market. Okay, I know the market rarely continues on the trend when it pulls back to the 23.6 or the 38.2. My best times, my best period, my very best point in using Fibonacci is the 50% or the 61.8%. Why I do that is very simple. Let me tell you my reason for having this as my best zones. These are the zones that give you the best entry. Because if you're putting your, for instance, let me be practical with these things for you. So if you're putting, let's just assume the market is retracing from 23.6. Your support, your stop loss would definitely have to be a bit longer, because you're putting into consideration this last support, because the market can actually do 100% retracement before it actually starts, going back and following the trend. So why would you want to put your support all the way here? That's for you to put into consideration this last resistance level. Sorry, I might be mixing support and resistance, but I know you guys understand. Sorry, I don't want this video to be long. That's why I'm actually trying to be in a hurry a little bit. But however, please don't if I mix words, I know you understand. So you might put into consideration this last resistance level, and it's not nice that you're trying to put your support like somewhere above here, like, because you can't even tell where the next level might be, where the next what's it called, the next support level for you to actually put your take profit. So do you know whether it's here or here? How sure are you? So this is like the most obvious place you probably just want to just take your profits and move out of the market. So this is the 23.6, 38.2 are just not really good levels for me, for my style of trading. Okay, so I don't advise that. My best levels are from the 50, or in fact, when I find retracement or my favorite candlesticks patterns happening in between the 61.8 and the 50%, that's like the best. Oh my god, whenever I see a retracement happening and it gives me my kind of entry patterns on the 61.8, between the 61.8 and 50%, oh my god, is voila, is the trade is like 80%, 85% of the time. It's an excellent. And then if for any reason it confluences with the 50 or the 20 moving average or the 200 moving average or the 10 moving or the 8 or any of the moving averages that I love using, it's excellent entry. Okay, so let's see whether we get something here. So okay, good. So let's see. Good. So you see why I always tell you that 23.6% resistance from the Fibonacci is usually not strong. It's short-lived. It will just give you like a fake resistance, then it starts pushing up again. Okay, as in this case. Okay, let's see. Good. So as you can see, if you are trading up the 23.6% retracement, you would have definitely been stopped out. So let me adjust this a little bit further, so that we can clearly see the chart much more easy. So what I'm looking for is between the 61.8 and 50% retracement. I don't like the 38.2, as I told you guys already. So let's see whether it pulls back to any of this. Although this is actually like a good, and 38.2, we might risk this, but this is not my kind of entry. You can do this, okay? You can actually trade off the 38.2. But I usually don't trade it. But I don't know whether this market reverses from 8.2, but even if it does, it's still okay. I mean, the aim of this video is to teach you, and I've already told you my level. So even if this market reverses from here, still fine. I'll end this video having been able to teach you what I actually want to teach you. So as you can see, this particular market reversed from the 38.2. It didn't get to the 50% retracement, which is totally fine. Okay, which is totally fine. So it got to the 38.2 and it started trending, okay, which is still fine. Okay, but like I said, my best levels are usually the 50%. I'm a very patient trader. I don't just enter any trade. Okay, I love waiting to see what exactly I want to see before entering the trades. Okay, so in this case, this is where it actually reversed from. So maybe let me just find another video and show you where it actually happened on my best kind of level. So this is for this one. Let's see. Okay, this one didn't get to 50. It reversed from the 38.2, as you can see here too. Let me move this out. Let's find a place where I get my kind of perfect entries. Okay, now here is another area. So this, let me zoom this out. So this is a trend clearly setting up here. Okay, good. This is like my kind of perfect entry from the 50%. As you can see, the market continued trending from the 50%. And like I told you guys, in this case, it confluenced with the, there was a confluence with the 20 moving average at this point. Okay, so it is bouncing off the 20 moving average and also bouncing off the 50% Fibonacci. This is like a no-brainer. These are the kind of trades that I can put and just go to sleep. I just know that this one, if it doesn't happen, sometimes, of course, there's nothing sure in this market. You can wake up and say that you've lost money, okay? But however, most of the time, 85% of the time, this is like free money. Okay, just before you go, I have a particular video on this channel where I talk about the most consistent and the most one of the most necessary habits of every successful trader. Now, this is one of my most amazing video on this channel. It's a video where I teach the very exact habits that I have seen in every successful trader you know out there. So I'll be linking that video somewhere here so that you go and watch that video. You learn the successful habits, because aside knowing the strategies for trading, if you don't have good trading habits, you just keep making losses in the market. So I'll link that video right here so that you go and watch that video on how to, make how to, develop good trading habits. Okay, so that's the video, next video to watch from after watching this video. Then finally, if you're yet to subscribe to this channel at this point, like seriously, I would love you to subscribe. Okay, subscribe to this channel. I bring like serious premium value on this channel every single time, and if you want to prove that for yourself, go and watch all my videos and you can prove that for yourself. But however, I also love you to give us a thumbs up and share this video if you can. I would really love that. Leave a comment if you learned something from this video. Please leave us a comment. Let's be sure that you're learning something following our channel. Okay, and click the notification icon so that every time I do a video like this, you do not get to miss out. Okay, so that's it. Cheers. Talk to you guys some other time. So go ahead, watch this video right here.